There are 6 different ways that you can start investing your money. Number 1 is you can consider investing in real estate. Number 2, stocks. Number 3, your own business. Number 4, into speculative assets. This is things like startups or cryptocurrency. Number 5 is physical gold or other precious metals. And number 6 is your own knowledge. When I talk about investing in real estate, generally this means you're going to go out and buy a property and rent it out to somebody else or to another business. But with $10,000, it's going to be extremely difficult for you to go out and buy a property. So instead, the alternative will be for you to go out and invest into some sort of crowdfunded deal, reinvesting or getting exposure to somebody else's real estate deal. This way, you don't have to worry about managing it and you're getting exposure to real estate. But you're not the one that's operating the deal yourself because you can't go out and buy a property with just $10,000. So if you want to invest in real estate or get exposure to real estate, look for some crowdfunded real estate deals. If you want to see some companies that allow you to do this, you can check out my affiliate down in the description to see what your opportunities are. Number 2 would be investing in stocks. The nice thing about investing in the stock market is you can get exposure to the economy. You can get exposure to individual companies like Apple or Amazon or Tesla or Lululemon. I'm not telling you what to invest in, just giving you examples. And you can start investing with as little as $10 or $1 and you get ownership into these companies, which means as these companies make more money, you can also make more money. You can make money if the stock price goes up. You can also make money if the company pays out a dividend, which is a cash payment that you get for doing nothing except owning the company. Now, not every company pays a dividend, but this is where you have that opportunity with stocks. And if you don't want to go out and invest in individual companies because you don't want to listen to earnings calls, you don't want to pay attention to the financial statements and do all that extra work, you can just invest in funds. There are ETFs or index funds or mutual funds that can give you exposure to the total stock market. There are funds that can give you exposure to the S&P 500, which is a group of the 500 largest companies in the stock market. There are funds that can give you exposure to the NASDAQ, to the Dow Jones, to healthcare companies, to AI companies, to international companies, to emerging market companies. There are funds that can give you exposure to whatever you want, and you don't have to worry about doing all the individual research. It can be much more passive, but of course the risk with stocks is you see a lot of market fluctuation. Markets can go up and they can go down very quickly. There's a lot of emotions involved in it, and if you cannot control those emotions, you might be the person that's making somebody else rich because you keep selling off your investments at a huge loss while somebody else is buying these investments at a discounted price. Third is you can invest your money into your own business. Now, if you have a business idea, if you have a side hustle idea, you can invest it in yourself. You have the highest upside potential opportunity, but you also have the highest risk. Starting a business is tough, but there's no limit to what type of returns that you can have. I mean, in the stock market, you're trying to grow your money on average by 10% a year. The stock market on average has grown by around 10% a year over the last 50 to 70 years. When you invest your money into your own business, your $2,000 investment could be worth millions of dollars if you can grow your own business. But of course, your business could also go bankrupt. So that's the risk you have with your own business. When I talk about speculative investments, things like cryptocurrency or startups, personally, and I can't give financial advice because I'm just a random guy on YouTube. I don't recommend what I do to anybody else. You always got to do your own due diligence and understand that investing has risks. When I think about speculative investments, if I'm getting started in my investment journey, I would not worry about speculative investments until I've really built a portfolio here, because these 2 things have built more wealth than anything else over the last century in the United States. Really, these 3 things, but starting your own business is kind of a different category. And so if you're getting started on your investment journey, you don't have any stocks or real estate, ignore the speculative stuff until you build a portfolio of the proven stuff. Then you can get into the speculative stuff. By speculative, I mean you can make a lot of money very quickly, but you can also lose that money just as fast. When it comes to something like physical gold, I own physical gold. This is a small piece of my portfolio. It's about 2% of my total portfolio. But for me, physical gold is not an investment. I look at it kind of like a hard form of savings. To me, it is a form of insurance or a type of hard money. It is not a real investment because this gold is not doing anything. When I go out and invest in real estate, this real estate is providing value because somebody can live there. When I invest in stocks, well, this company is working to produce value. They're working to sell a product. They're working to increase their profits. It's producing some sort of value. When I own gold, it just sits in a drawer. It doesn't do anything. So for me, it's a form of saving some hard money. That's why it's a small piece of my portfolio. I call it kind of like a doomsday insurance, but it's just a way for me to save some hard money. Some people look at it as something else, but that's the way that I look at physical gold. And then you can also look at investing in your knowledge, which is very, 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 did I say very, very powerful, especially in the beginning part of your financial education journey, because now you can use this knowledge to, number 1, invest your money smarter, get better returns, pay lower fees, and improve how much money that you have, because you can grow your money, but you can also use this knowledge to increase how much money you make. So if you're working a job, this could mean getting a new certificate, that way you can work a new job. This could mean learning how to negotiate your salary. This could mean starting a new side hustle. This could mean starting a new business. This could be finding new ways to earn more money. This is very powerful. Now, there's a lot of ways to invest in your knowledge. And you gotta kind of work up the ladder here. Because I get it, spending $2,000 on a class online can seem very intimidating. So what I like to do, or what I say, is start with the basics. Start with free content on YouTube. Start with free content on podcast. Then as you start to learn some more and you find some new topics that you like, start to invest in some books. 20 bucks, 25 bucks. Start to read a few books on the topic. As you start to learn more, now you can start to buy some classes. $300, $2,000, $2,500, however much they might be. And if you want more, then you can consider investing in some coaching programs, which also cost more money. But you don't gotta go and just start dishing out thousands of dollars that you don't have. Work up the ladder. Buy things that you can afford and start with free education. People assume that you got to spend thousands of dollars to go to conferences when you don't have that money. Start with what's free. And after you have some more money, then start to invest more money. Once you have more money, then you can start to invest more money. But it's all a game. Invest in your knowledge, invest in the things that have been proven, and continue to grow that money, continue to grow your wealth, because the reality is, if you do smart things with your money today, in 10 years, your future self will thank you many times over. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.